All right, let's jump right into it because something huge is happening in the markets right now. Seriously, the stocks that have been the undisputed kings for years, they're starting to stumble. And in their place, a whole new group of leaders is stepping up. We're going to break down exactly what's going on with this great market rotation.
And hey, if you're looking for a flashing sign that things are changing, you don't have to look any further than commodities. Just take silver, for example. It is showing absolutely incredible strength. I mean, you have serious analysts talking about a potential run to $100 an ounce. That isn't just a little rally, my friends. That's a massive signal that the market's entire psychology is shifting. I mean, it really is a tale of two markets. It's night and day. On one side, you've got the old darlings, the mega-cap tech stocks. And right now, they're in a clear downtrend. They're breaking below key moving averages, and you can just feel the selling pressure, the distribution. But then you look at the other side, the small-cap stocks. It's a completely different picture. They're in a beautiful uptrend, showing real strength and accumulation. The divergence is just stark.
So that brings us to the billion-dollar question, right? We can see this massive rotation happening. We can see the money moving. But what's the engine behind it all? What's really driving this incredible tectonic shift in the market?
Well, the answer really starts with a major change in economic strategy. It's a philosophy that's rewriting the investment playbook, and people are calling it the run-it-hot economy.
So what on earth does that mean? In simple terms, it's a government approach that says, let's push the economic gas pedal to the floor. We're talking about trying to juice GDP growth up to maybe even 5%. And they're doing it with things like tax cuts and trying to keep interest rates low. The goal is just to keep that economic engine running at full blast.
But look, when you run an engine that hot for that long, there are gonna be side effects. It's just physics, right? We're talking about inflation that just gets kind of sticky and doesn't want to go away. We're talking about a national debt that's just skyrocketing, and the bond market, it's definitely feeling the heat. But for certain kinds of assets, this environment is like a massive tailwind. And this chart really tells the whole story of who wins and who loses in a run-it-hot world. You can see that pro-growth assets, things like stocks and commodities, they tend to do really well. They just feed off that economic expansion. And the clear loser? It's bonds. With inflation chipping away at their value, investors are just looking for better returns somewhere else.
Okay, so let's connect the dots here. How does this big-picture economic stuff actually translate into the moves we're seeing in our trading accounts? Well, it all comes down to a very simple idea. You have to follow the flow of money.
And here's the key takeaway. Investors are on a mission right now, and that mission is to find value. For years and years, big tech was the only game in town, and those stocks got really expensive. Now, smart money is taking some profits off the table from those names, and they're going bargain hunting in all these other sectors that have been overlooked for way too long.
So where is that cash going? You can see it right here. It's pouring into small-cap stocks, the Russell 2000. It's flowing into commodities. We're talking metals, energy, the whole shebang. And it's also heading into international markets and industrial companies. Basically, anything that stands to benefit from a red-hot, growing economy.
This table just puts it all in black and white. It couldn't be clearer. You look at the mega caps, the NASDAQ, what do you see? Lower highs and lower lows. They can't even stay above their 21-day moving average, a classic sign of weakness for traders. Now, look at the small caps, the Russell 2000. It's the polar opposite. Higher highs, higher lows, and it's trending beautifully above that same moving average. You can see the big institutional money flowing into small caps, while the excitement around big tech is fading. It's a classic rotation playing out right in front of us.
And you know, to really see this speculative energy in action, we have to zoom in on silver. Its recent run is the perfect textbook example of what traders call a parabolic move, and that often leads to this wild phenomenon known as climax action.
Now, climax action sounds super dramatic, but it's a critical concept to understand. It's that phase of a move where the price just goes almost straight up. It's like a rocket launch. And during this crazy ascent, you have short sellers betting against it. But as the price keeps ripping higher, they get squeezed. They are forced to buy back their shares to stop the bleeding, and that frantic buying just adds more fuel to the fire. It's what creates those absolutely face-ripping gains right at the end of a big move.
And listen, this is a super crucial distinction for any trader to understand. Climax action is the journey. It's the process of the price going parabolic. And let me tell you, it can last a lot longer than you think is rational or even possible. A climax top, on the other hand, is the destination. That's the final tippy-top peak of the move. And a huge mistake traders make is they confuse the journey for the destination. They sell way too early and miss out on the most explosive part of the entire trend.
But, and this is a huge but, be warned, when this kind of party finally ends, it's not a gentle fade out. As one veteran trader I know likes to say, when it's over, man, it's gonna be ugly. Really ugly, really fast. These parabolic moves don't just correct, they crash. It's sudden and it's sharp.
So, if these moves are so powerful, but so incredibly risky, how in the world do you navigate them? Well, that brings us to our final and most practical section, how to watch for the warning signs.
Okay, first things first, let's be real. Trying to sell at the absolute perfect top is a fool's errand. It's a fantasy. Even the best pros in the world can't do it consistently. The goal is not to be perfect, the goal is to be smart, manage your risk, and know how to recognize when the trend is starting to break down.
So, what should you actually be looking for? Here are 3 key signals. First, watch for any price action that just feels abnormal or looks different from that steady climb that got you there. Second, you have to watch your key support levels. A close below the 21-day moving average, for example, is a classic warning sign that the momentum might be shifting. And third, and this might be the most important one, scale out your profits. Don't try to sell it all at once at the top. Lock in some of those gains along the way up to protect your capital.
So here's the bottom line. A major market rotation is happening right now, as we speak. Money is flowing out of the old leaders and into the new. The economic policies behind all this are creating some absolutely huge opportunities, but they're also creating brand new risks. The market map is literally being redrawn before our very eyes. So the only question left to ask is, are you prepared to follow it?